This episode is brought to you by the Financial Services School, specializing in educating insurance professionals.
On our last marine episode, we started to answer a question from Chris Payne. Here it is. I'm a GI broker and I still sometimes find marine insurance confusing and complicated. Would love a video on that. So we've quickly touched on what marine insurance is and what Incoterms are. Click here to see a video on that. But what are some of the common Incoterms and what do they mean? Now it's going to get a little heavy as some of these terms are a little bit jargonistic, but we'll do our best as always to demystify them. Now starting with FOB, this stands for free on board. In this type of sale contract, the risk of the goods is with the seller until such time as the goods are loaded onto the ship. Originally the transfer point was when the goods crossed the ship's rail. Now when a sale is made FOB, it means the buyer needs to arrange insurance from the moment that the goods they purchase are placed aboard the vessel. Now another common one is ex-works, sometimes written as EXW. So it all means that the buyer is responsible for the cost of the transport and the duties payable. CIF or cost insurance freight, the seller includes the cost of insurance and freight in the purchase price. With CIF, the risk is transferred to the seller as soon as the goods are set down inside the ship. You can see from my explanation that both CIF or cost insurance freight and FOB, free on board, the transfer point for the risk is when the goods go on board the ship. But in the cause of FOB, it is the purchaser's responsibility to insure the goods once they're on board. Whereas with CIF, the responsibility to arrange the insurance is with the seller, who includes the cost in their selling price. Too much jargon! No! One point I would like to make is that if you or your customer is importing goods from countries where the purchaser or the broker does not have faith in the insurance industry, our recommendation is either for the goods to be purchased ex-works so that the purchaser arranges the insurances through their insurance broker, or a contingency cover is taken out which will protect the purchaser in the event of default or non-payment of the claim by the seller's insurance. Click here for another video we did. Give us a thumbs up if you found this helpful. Comment with more stuff you want to know about. And for more demystified insurance jargon, click that subscribe button.